Money Talks is sponsored by Astound Broadband, powered by Grande.
Much more expensive. You've noticed interest rates have risen and we all now pay more to borrow. And it's all happened due to inflation. So let's take a deeper look at the cause and effect in tonight's Money Talks. One of the tools the Fed has to fight inflation is to raise what's known as the Fed funds rate. This is the interest rate that banks charge each other for short-term loans. And then that gets passed on to us, the consumer.
Interest rates can be thought of as the cost of money. Lower interest rates make borrowing money cheaper. Higher interest rate makes borrowing that money more expensive.
And we have noticed borrowing to get a home loan or a car loan has gotten much more expensive. But it wasn't this way throughout the teen years when we saw historically lower and lower rates.
Lowering interest rates can help stimulate the economy. That'll help individuals do things like buy new cars, buy houses, and then businesses oftentimes they'll borrow in the form of bonds to expand operations or to hire.
After a period of great growth, we now have the Federal Reserve Bank trying to slow our economy to bring inflation down. This has been going on for over a year.
It might sound counterintuitive, but at times the economy can grow too quickly and overheat, and that can lead to inflation. When we do get inflation, one of the tools the Fed has to bring inflation under control is to raise interest rates. Raising interest rate is going to cause people to think twice before they do something like buy a car or buy a house. It's going to make borrowing more expensive for individuals and businesses. So higher interest rates can bring the economy, the growth under control and help fight things like inflation.
And that is where we are now. The fine razor's edge that the Fed has to walk is to not slow the economy so much the job layoffs grow, putting us into a recession or worse. And Neil went on to mention that the Fed increasing the Fed funds rate doesn't directly increase the interest charged on other types of loans. He wanted to point that out. But generally, it will lead to increases throughout the banking system, which is where we are right now, making many wonder, when's it going to cool off?